Is crypto about to stage one of the biggest comebacks in financial history? After a brutal start to 2025 that saw Ethereum crash nearly 50% and Bitcoin retreat from its highs, the tides may finally be turning. With major institutional moves, groundbreaking tech updates, and changing macro conditions, we could be witnessing the early signs of a new crypto rally. But is this real recovery or just another fake out? Let's break it down. Bitcoin's resurgence. After a sharp pullback earlier in the year, Bitcoin has clawed its way back and even hit new all-time highs in May 2025, reaching the $109,000 mark. What's driving this renewed momentum? The answer lies in a mix of global economics and institutional appetite. Following a turbulent geopolitical phase and policy shocks like Trump's steep import tariffs, the markets have begun to stabilize. A temporary 90-day tariff pause between the US and China has calmed fears of a trade war spiral, pushing equity markets higher and Bitcoin right along with them. At the same time, institutional investors have been pouring into Bitcoin ETFs. Over $300 million flowed into spot Bitcoin ETFs in just 24 hours, driven by regulatory optimism, especially around new US stablecoin legislation. This kind of capital injection sends a powerful signal. Big money still sees Bitcoin as a long-term hedge, and they're willing to bet on it even in volatile conditions. Ethereum's rough start to 2025. Ethereum entered 2025 battered. The price dropped over 46%, investor sentiment was bleak, and Ethereum ETFs struggled to gain real traction. Layer 2 solutions lost steam and new user adoption slowed. Solana meanwhile surged ahead in both transaction volume and decentralized exchange activity, raising real questions about Ethereum's long-term dominance. But that narrative might be starting to shift. Data shows a sudden 62% week-over-week spike in active addresses on the Ethereum network. Layer 2 dominance climbed by 57%, and for the first time in months, Ethereum started leading trader sentiment. Could this signal the beginning of a revival? Vitalik Buterin's scalability vision. In mid-April, Ethereum's co-founder Vitalik Buterin unveiled a bold and technically nuanced proposal aimed at resolving one of Ethereum's most persistent challenges, the scalability bottleneck within its execution layer. This proposal, though highly technical in nature, represents a strategic pivot that could reshape Ethereum's position in the Layer 1 battlefield. At the heart of Buterin's idea is the streamlining of Ethereum's execution layer, essentially the component of the network responsible for running smart contracts and processing transactions. Over time, this layer has become increasingly complex, limiting performance and making scaling solutions more difficult to implement. Buterin's proposal focuses on simplifying this architecture, reducing redundancy and enhancing throughput without disrupting the existing developer experience or breaking compatibility with deployed applications. The goal? To make Ethereum significantly more scalable, efficient, and user-friendly, particularly for new developers and users interacting with dApps. The proposed changes would be barely noticeable to most end users, Buterin stated, but the benefits under the surface could be enormous. Lower fees, faster execution times, and improved consistency across Ethereum's expanding ecosystem are just the beginning. This approach is especially crucial as Ethereum faces increasing competition from faster and more agile Layer 1 chains like Solana, Avalanche, and even emerging players such as Sui and Aptos. These newer chains have built their value propositions around speed, low fees, and a seamless user experience, areas where Ethereum has historically lagged due to congestion and high gas costs. However, Ethereum's advantage has always been in its deep-rooted developer community, network security, and ecosystem maturity. If Buterin's proposal delivers on its promises without compromising decentralization or security, it could finally bridge the gap between Ethereum's idealistic vision and the user experience offered by its rivals. Ethereum versus Solana. In raw numbers, Solana has been crushing Ethereum on several fronts. Over the past 3 months, Solana recorded nearly 4 times the number of transactions as Ethereum and its L2 chains combined. Solana's DEX volumes lead by over $30 billion, and its daily active address count is almost triple that of Ethereum's. But these numbers don't tell the whole story. Ethereum still holds a massive edge in developer mindshare, institutional partnerships, and real-world asset tokenization. With Buterin's scalability roadmap, the network is set for a structural overhaul. If adoption rebounds in tandem, Ethereum could very well start to reclaim ground. BlackRock, tokenization, and Ethereum's institutional path. One of the most overlooked bullish catalysts for Ethereum is the massive $150 billion move by BlackRock. The financial titan is launching a digital share class for its Treasury Trust Fund on Ethereum. Why does this matter? This opens the floodgates for institutional capital to flow through Ethereum's infrastructure. With BNY Mellon acting as the bridge for this new tokenized asset class, Ethereum's role in the real-world asset RWA ecosystem becomes foundational. CEO Larry Fink has repeatedly stated that tokenization is the future of global finance, and Ethereum is at the center of that vision. If this experiment works, it could usher in a new era of demand for ETH beyond just speculative trading. Ethereum ETFs. Ethereum spot ETFs initially disappointed, but in May signs of life began to emerge. According to Farside data, US-based Ethereum ETFs have seen multiple consecutive days of inflows, with nearly $2.5 billion entering the market in just 15 days. That's not a small number. While Bitcoin still dominates the ETF race, Ethereum is now catching up. The growing inflows suggest increasing confidence from institutional players, especially as Ethereum's long-term use cases in tokenization, DeFi, and dApps continue to mature. What the derivatives market is saying about Ethereum. Look deeper into Ethereum's derivatives data, and another bullish narrative appears. Open interest on Ethereum contracts rose by nearly $3 billion between April and May, signaling increased trading activity and bullish expectations. According to CoinGlass, the long/short ratio is approaching parity, indicating a more balanced, but increasingly optimistic, trader base. Derived.xyz also shows a strong bias toward call options, with calls outnumbering puts by 4-1. Over 80% of all option premiums are now being spent on calls, suggesting traders are betting big on upside potential. Has Ethereum hit bottom? Technical indicators say maybe. According to analysts at Lab4Crypto, Ethereum recently touched its -1 SD line, a technical marker that often signals a cycle bottom. Historically, this level has offered a strong entry point for long-term investors looking to accumulate ETH at discounted prices. Meanwhile, momentum indicators like the RSI and MACD are turning bullish. RSI has climbed above 55 and is trending upward. MACD is showing green bars above the neutral line, two signals that ETH might be preparing for its next leg up. Analysts now point to $2,000 as the next psychological barrier, with a medium-term target around $3,000 if momentum continues. Is this the start of a new crypto cycle? Crypto has a habit of making believers out of skeptics, but only when the data backs it up. In 2025, we're watching a fascinating setup unfold. Bitcoin is already setting new highs. Ethereum, though bruised, is showing strong signs of recovery with fundamental upgrades, institutional partnerships, and improving trader sentiment. Whether this is the beginning of a full-blown bull market or just a well-timed bounce remains to be seen. But one thing is certain, crypto isn't going quietly into the night. If you want to stay ahead of the curve, dive deeper into the data, and understand what really drives the next wave, make sure to subscribe for more in-depth analysis like this.